Uh, Hi, good evening, everyone. Thanks for joining for the webinar regarding the unit trust in Sri Lanka. Our senior fund manager, Rajith Alapatha, he will be taking you all through what is unit trust and what are the different funds available in Sri Lanka, and give you all an idea about what is happening in the unit trust industry, so you all can get a better idea. So Rajitha, please take over.
Hello, thanks, Nishant. Good afternoon, everyone. So this main motive of this presentation is to have a better idea of the unit trust industry in Sri Lanka and what's unit trust. So in simple terms, if we say what a unit trust is, to explain, say if a person wants to invest in a unit trust, say there are various kinds of asset classes. For example, say if someone wants to invest in a bond, so he doesn't have the capacity to go and invest in a bond, and say you have to have about 5 to 10 million. So if someone wants to invest, he gets some friends from his side and collect some money and pool it in, and then invest in that asset class. That is called a unit trust. So this is in simple terms, without going into correct details in technical terms. In technical terms, a unit trust is a formal investment structure where funds from multiple investors are pooled together to invest in diversified range of securities, such as stocks, bonds, debentures, and money market instruments. So when we go to the next slide, the key features of a unit trust is you get the professional management arm of a unit trust. So that, for example, Senfin Asset Management is a professional fund manager who will structure the unit trust, specific unit trust, which I will come into detail in the later slides. So those specific unit trust, and they will structure the unit and give it to the customers to invest. So that is called the professional fund management arm of a unit trust industry. So you get the regulator. The regulator is currently the Securities and Exchange Commission of Sri Lanka. So the ownership of the securities on the securities or the unit trust will be under the trustees and the custodians. Their duty is the whole ownership of the unit trust. This is not the fund manager. So their job is to see whether the fund manager invests properly in various asset classes according to the trust certificate, which is issued by the Securities and Exchange Commission, and the securities that, for example, for a bond, if you invest, the security will be with the trustee's custodian. So that is ownership of the trust is with the trustees. So then the other key feature is the income distribution and profit generation. And you get the flexibility. Investors can decide how much to invest and how much to which fund they have to invest according to their needs. So accessibility of a fund is very low in Sri Lanka. Maybe with 1,000 rupees, you can invest in a unit trust fund. So we go into the key benefits areas of the unit trust industry. As I said earlier, the professional management arm is the fund management arm who will invest in the fund of the unit trust. And we have the diversification of the fund. Funds are invested in a careful selected portfolio of many asset classes. So if you get a specific fund, they will go into the detail according to the trust certificate and according to the guidance of the Securities and Exchange Commission. They will invest in selected asset classes accordance of the trust certificate. So that is the diversification of a fund. So if you get the liquidity is if some fund investors will come out and come in and come out of the fund. So they keep the liquidity part guided by the trust certificate. the securities, as I said earlier, so the securities is in charge of the trustees and the custodian of the fund. So if someone purchases a bond, for example, the bond security will be will be held by the trustees or the custodian. So the flexibility part is the fund operates provided flexibility to how much to invest, how much to redeem, and switch from fund to fund. That option is also there of a unit trust. So, for example, small investors can come in and go out as they desire. If the minimum for a unit trust is now in the country is about 1,000 rupees. So then we go to the part, what is the net asset value? As everyone knows, net asset value is the fund's total asset minus total liabilities. The size of the fund and the unit allocation to the investors are determined by the net asset value of the fund. So when the net asset values go up, the fund unit price goes up, and when the net asset price goes down, the unit price comes down. So that is the mechanism of the net asset value. So further details I will explain in the other slides. So as I said, the unit trust, as an example, let's say that there is a unit trust fund size totaling up to LKR 500 million, and the total unit price is equal to 10 rupees. If you invest at 5,000 rupees, you'll end up with 500 units. So that is the mechanism of the unit trust. So when you withdraw your unit trust fund, or money, you will have to sell your units. So the unit will be determined by the selling price when you sell the units. And the buying price is when you invest in the unit. So that is the buying price, and the selling price is called when you redeem your units or redeem your interest. So participants of the unit trust. So this is a basic chart that I've done. The fund management companies there, for example, Senfin Asset Management Limited, the trustee and the custodian will be Hatton National Bank. Investors are the unit holders, and the regulator is the Securities Exchange Commission of Sri Lanka. So this is how I want to explain how does a unit trust operates. So if you get you get the investors and the unit, which we are called the unit holders, then they put in the money and take the money out. So the investors will invest with the specific unit trust fund, and the fund management company will invest according to the trustees' guidance and the regulators' guidance in various asset classes. This is the how a unit trust operation operates. So the fund management company is there, the regulator is watching the fund management company. Even the trustee is responsible for some sort of regulation because they hold the ownership of the trust certificate and the trust. So they are also having their compliance with the fund management company along with the regulator arm, which is always will look into all these funds. And as a key point, most of the fund management companies have their own regulators to see whether the funds are utilized properly. That's their compliance arm. So this is the chart that I've drawn up just to get a basic idea how the fund management operates, how the operation part works in simple terms. So we'll have to go to the types of unit trust. So there are two kinds of unit trust funds in Sri Lanka. One is open-ended unit trust funds and the closed-ended unit trust fund. So closed-end unit trust funds, I think if I'm correct, there is only one. There were few others back then in 2017. They have been closed. If I go to explain what is a closed unit trust fund is, is you invest and lock in that money for a period of 5 years or 4 years, which is spelled out in the unit trust deed. So that is a closed-end fund. You get various rules and regulations according to what asset class you are investing, and then the fund is closed. Some funds trade in the Colombo Stock Exchange also. Some funds. So, but these type of funds are more into like places like India or Singapore. There are more closed-end fund trading in those type of countries. So in Sri Lanka, particularly now, there is only one closed-ended fund operating. So the rest of it is about open-ended funds. You get various types of open-ended funds in Sri Lanka. First of all, I'll take the basic open-ended unit trust fund is the money market fund. I think most of you all must be familiar with this term. Money market fund is a very easy fund which will invest in very short-term assets such as treasury bills, and short-term treasury bonds, which are less than 12 months. Especially the Securities Exchange Commission is very regulative of these typical funds because they are short-term funds. So money market funds are operated, as I said earlier, with the unit trust. There are different unit trust deeds, and they operate, and some are you get the graded funds as well now. And all these money market funds are short-term funds, and they only invest in selected fixed income assets. So I will go into different asset classes later on. So then you get the income fund. Income fund is like more into long-term gilt funds. Like you can invest in bonds, which for 3 or 4 years, and then you get the long-term bonds or corporate debt. So those type of funds are called income funds. Then you go into gilt edge fund. Gilt edge funds are mostly short-term treasury bill fund. You can invest in bonds, but only less than 12 months. So those are gilt edge funds are called short-term treasury bill funds. Then you go into the equity funds. As you all know, equity fund is some are defined in the trust deed, which sectors you can invest. Some are not. You can invest in anything, but all these are regulated by the Securities Exchange Commission, plus the different trustees, plus the individual management. These equity funds are guideline, and these equity funds have different analysts who will do their own research and invest in particularly equity shares. Then you go into the balance fund. Balance funds is can be a mix of money market and income, which is short-term bills or short-term bonds, or both short-term bills plus long-term bonds. Or you can go into short-term bills or equity. So those are called balance fund. Balance funds, you can invest in different asset classes or mixture of them, which is spelled out again in the trust deed. So those are called balance funds. Then you go into index fund. Index funds, for example, in the Colombo Stock Exchange for S&P index, if you track that, only that shares that will only those shares which will be invested in the S&P index will be invested in the index fund. For example, say commercial bank or something like that is traded, they will buy only that S&P index funds. So those are called index funds. Shaira funds are specific sector for specific clients who are interested in those type of funds. So sector funds are basically if someone wants to invest in a, say, for example, consumer sector or the financial sector. So those sector funds are very spelled out in the trust deed, and those trust deeds will say these are the sectors that will invest, and they have different indexes which will show the returns, the benchmarks. And those are sector funds, and the sector funds are categorized. Say for example, consumer, you will only invest in consumer funds in the Colombo Stock Exchange. So those are the few funds. I think there are more of funds. I won't go into much more details because it's a huge spectrum spread out in our industry. So for now, for the time being, I'll stick with these funds. So I go into how to register and how to invest in the funds. This is a basic idea. I want to keep it simple. Maybe in the next time when we come in, we'll have a more discussion, because I just want to go into details and show people what is a unit trust is. That is the main idea of this presentation. So if you want to open a unit trust fund, these are the basic steps that you have to take to open a fund. Now everything is online, and most of the fund manager companies offer this. So when you're investing, how to invest in a unit trust fund, these are the other steps that you will, and the guidelines that you will need to know if you're investing in a unit trust. So for now, this is it from me. I just want to have it open discussion. That will be more interesting and conversational, and more. There will be more some sort of a learning curve. If we can go into question and answers, and over to you, Dishan.
Hi, thank you, Rajita. So, Rajita, we've gotten a few questions regarding the unit trust. So, one of the questions is that what is the risk in investing in unit trust? So, basically, they're asking about the risk which is associated with any unit trust fund.
Yeah, if I go back to that slide earlier on, so these are the type of funds that, in simple terms, that unit trust industry offer as an overall sector. Say for money market funds, the income funds, and the gilt age funds, we take as low risk. So if say instead the money market fund is very, very low risk, because they invest in FDs, CPs, or treasury bonds, bills, and specific rated commercial papers. So we call them low risk funds. Income funds, you get two types. Income and gilt age funds, you get two types. One is mark to market, and one is not mark to market, especially gilt age funds. Income funds, some are mark to market. Then there is the risk capacity is a bit medium. I'm not going to say it's very low like the money market funds, but the income funds can, if the fund is mark to market, I think mark to market sense, like I will have to do another presentation about that. But for time being, income funds is in the middle category of the risk situation. But the gilt age fund, if it is not mark to market, so it will fall into the category of money market because it's not mark to market. So then you go into the equity side. Equity side, there is high risk, high return. The markets can come down, go up. So if somebody is like willing to take a risk, so there is a risk in investing in an equity fund. Balance fund, it can go both ways. That is, say, if you're if you're investing 50% in equity, 50% in gilt or something, the risk is medium. But the equity is less, maybe 20%. Then again, that risk capacity is manageable. So if you go to an index fund, mostly index funds are now in Sri Lanka is according with the Colombo Stock Exchange. So there is a risk like the equity, and the sector fund is also a equity fund. So in Sri Lanka, so there will be a high risk, high return scenario there. So those are the risks there, but money market is very risk low fund. I would say that is the risk low fund that I can tell you all about. So any other questions, Deon?
Yes, Raj. So we have gotten another question.
Yeah.
So the question is there any instrument that can be invested in foreign currency?
Yeah, there are instruments like that. Those are specific funds. Say, for example, dollar denominated funds. Those funds can be catered to specific clienteles. So that has to be a new fund, or you have to get permission from the Securities Exchange Commission and launch a new fund. Yes, that could be done. So that category also, because in Sri Lanka, can be also medium risk fund. That could be done, and there are a few funds like that in Sri Lanka as well.
Okay. So we have gotten a few more questions, Rajita. And one of the questions is that what is the difference between a unit trust fund and a bank FD?
Basically, bank FD is one-off asset class which a client will go and invest. So FD is just one, but if you invest in the money market, in that money market fund, there'll be one FD and several other assets classes as treasury bills or short-term debentures or something like that, rated papers, something like that, and there'll be more advantage to the client by investing in a money market than putting in a FD, because the rates can beat the FD in the long-term scenario. That is the difference between a normal FD and a money market fund.
Okay. So there's another two questions, Rajita, and one of the questions is that what are the fees applicable for unit trust funds? So
fees, as I said, if you go to this chart, money market will be really minimum. Maybe there's a from 0.5 to 0.45. It varies. Income fund, according to the, if it is a mark-to-market fund, it can be 0.75. It's really minimum. If you take that, that is the management fee, along with a simple trustee fee and a custodian fee. Those are the only fees that is, except for other fees like audit fees, they'll be in the, that's not minimum. So fees will be management fee plus the trustee fee and the custodian fee in a money market fund is very, very minimum. Maybe about 0.45 to 0.5. That is the average money market management fee structure. But if I go to say, if you go into income funds, that varies because it's a medium return fund. So it might be the management fee vary between 0.85 to 0.75. And giltage fund will be the same as money market fund. But equity funds, yes, the rate will be between 1% and 1.25 or 1.5, depending on the, because there's a high risk, high return fund, equity funds. So that's why their management fee is high. So as balance fund, so it's, since it's balanced, it won't be higher as the equity funds. So that structure is like that.
Okay. So the other question is, Rajita, are there any limitations to withdrawing funds in the unit trust once invested?
Once invested, no. In the money market, there is no such thing. If you invest say 1,000 or 100,000 or 500,000 or 500 million, you can take out your money.
Okay, Rajita. So those are the questions that came in. I believe there are no other questions from the audience.
Yeah.
Yeah. So anyways, thanks everyone for joining in for our first webinar regarding the unit trust, and I hope that you all gain some valuable insights regarding the unit trust and what are the different funds available. So we'll be conducting more episodes of the same where we'll be giving you more additional information in future regarding the unit trust and what are the different funds and how to go and how to identify your risk, etc. So thanks everyone for joining in, and I hope you all gain some valuable insights regarding the unit trust and the funds available in Sri Lanka. Thank you.